Welcome back to TechKidFX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which has lost a key area of support at around the $147.9 mark and is still holding above a key area of support at around the $133.2 mark. And at the time of this recording, we have lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also fully maximized our target area to the lower side in the formation of this wave 4, and I believe soon we are going to start another bounce to the upside in the formation of this wave 5. And before I give you my next target areas to the upside in the formation of this wave 5, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after making it to an all-time high, we started the bear market where we had been seeing no prices in this ABC corrective structure, which gave us a bear market low at around the $40.1 mark. And after seeing the bear market low, we started a very nice bounce to the upside in a move that has been obeying the Elliot structures, where you can see that I have this Elliot structure in blue having the wave 5 making its peak at around the $229 mark, and also completing the formation of that first wave to the upside. And after seeing the formation of that wave 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, where I also expected to see an ABC corrective structure having the wave C fully maximizing the formation of that wave 2. And I also had this red target area within which I was expecting to see the low for that wave 2, and we saw our low for that wave 2 at around the $94.4 mark. And after seeing the low for that second wave, whatever we expect on the long-term scenarios is a bounce to the upside in the formation of this wave 3. And by first sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that perfectly lies at around the $401.6 mark. And that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that perfectly lies at around the $401.6 mark. And that is the minimum that I'm expecting that higher Elliot wave count 3 to the upside to do. And in the formation of that wave 3, which is an impulsive wave, we also expect to see a 5-wave structure in formation within the formation of that wave 3, and I believe we are seeing such a move right here, having this as the first wave to the upside. Then we have retested in the formation of that wave 2, we have also peaked in the formation of this wave 3, and I believe we have also seen the low for this 4th wave to the lower side, and soon I'm expecting a bounce to the upside in the formation of this wave 5, and also showing you that this wave 3 to the upside has peaked by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that perfectly lies at around the $164.8 mark. And that is the minimum that I was expecting that wave 3 to the upside to do, where we made our peak at around the $165.5 mark before we started retracing in the formation of this wave 4. And by connecting the Fibonacci's from the low of the second wave to the high of that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, which lies between the $141.1 mark and the $133.6 mark, which is a target area that we have now fully maximized by making one more new low at around the $133.7 mark. And after making this one more new low, there are chances that this might be the low for this 4th wave, and whatever we can expect next is a bounce to the upside in the formation of this wave 5. But for that to happen, we need to see Quant manage to break above the 20-day MA here on the 4-hour chart, and a break above the 20-day MA could trigger even higher prices. That is a move to the upper side to give us a breakout above the key area of resistance at around the $147.9 mark. And once the breakout is in, then we can expect a retest and then continue pushing even higher. And the moment we manage to break above the wave 3 high at around the $165.5 mark, then that will be enough confirmation that whatever we are seeing over here is a bounce to the upside in the formation of this wave 5. And sketching out a minimum target area to the upside in the formation of that wave 5 using the trend-based Fibonacci by connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3, that gives me a minimum target area to the upside in the formation of that wave 3, in the formation of that wave 5 at the fib level 1.618, and that perfectly lies at around the $233.6 mark, and that is the minimum that we can expect that wave 5 to the upside to do. And once the wave 5 plays out, then we can name this 5-wave structure to the upside as a larger Elliot wave count 1 before we can expect a larger Elliot wave count 2, then a wave 3, and then a wave 5 to fully maximize the formation of that larger Elliot wave count 3. So that is what I'm expecting here on the short-term scenarios. And in case we do not see a break above the 20-day MA and also continue holding below the key area of resistance at around the $147.9 mark, then there are chances that Quant might continue retracing, lose the key area of support at around the $133.2 mark, which is a key significant key area of support, because upon losing this key area of support, then we can continue pushing even lower. And in case such a move plays out, then there are chances that Quant might give us a low between the fib level 0.5 and the fib level 0.618, and using the Fibonacci's once more connecting them from the low of the second wave to the high of that wave 3, then we can expect one more new low between the fib level 0.5 and the fib level 0.618, and now my new target area lies between the $140.9 mark and the $125.8 mark, and these can only happen in case we lose the key area of support at around the $133.2 mark. We can expect a low between the $133.4 and the $125.8 mark. So let's be patient and see how that plays out, and I'll be keeping you updated on that. And also taking a look at the indicators, here on the RSI we are trading at around the 42 mark, meaning we have massive room for us to support higher movements in the formation of that higher Elliot wave count 5. And also taking a look at the MACD, we had been able to print a bearish cross, but right now we are seeing a bit of a decrease in the momentum here on the MACD, meaning soon we might be able to print that bullish cross to fully support higher prices in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.